Hello traders and welcome to the Market Snapshot. My name is Valon with Titan FX and here are the key stories you need to know about this week. Japanese yen is again on the headlines this week after falling at 38-39-year lows, currently trading at 161.64. And this was pressured by Japan's unexpected economic contraction and widening of the interest rate gap with the US. The decline started last week after the yen suffered from the rising US 10-year Treasury yield ahead of May's US personal spending data. The Tokyo core CPI, which is the key indicator for inflation, also slightly exceeded the forecast at 2.1%. Last week, the yen fell by 0.7% against the dollar, marking its third consecutive weekly loss, and it dropped 6.3% in the second quarter due to significant interest rate gap between Japan and the US. Despite these losses, the Japanese government hasn't yet intervened. However, Japan has appointed a new forex diplomat, raising expectation of potential intervention. Moving into the Eurozone, the currency moved to 1075 against the American dollar after Marine Le Pen's far-right party was said to win the French election. The movement came ahead of the US non-farm payrolls report. Moving into the economic calendar, I've highlighted this week. Starting on the 2nd of June, we've got the RBA meeting minutes, then unemployment rate out of the Eurozone, as well as the inflation. Then there is a speech from Chair Powell, which is going to be interesting. Usually a lot of volatility comes out of that. Retail sales in Australia. Then there is the employment change out of the US. So initial jobless as well as the employment. FOMC minutes later on the 4th of July. Retail sales out of the Eurozone, unemployment rate, and then the big one, which is the non-farm payrolls. And the forecast is that they're going to add about 160,000 jobs. Previously was at 270. As you might have guessed it, today's chart of the day is Euro USD. I'm looking at the 4-hour chart and we can see that big move from the start of the week and starting to come down after a softer than expected German CPI report. The key levels I'm looking at today, perhaps this week, will be the support, which is well established on short-term basis at 1067. These levels give away that we could see the euro rally and expand. The other level is the 108, which is just next to the 200-day moving average indicator. And this is a reliable previous resistance and support. A lot of bulls want to see a move above that zone before getting more constructive on this currency pair. So for now, I'm more neutral until there is an actual bigger move. As I mentioned earlier, we do have the inflation rate and quite a bit of data, including retail sales out of the EUROZONE. So it'll be interesting to see how the rest of the week will turn out to be. But definitely keep an eye on the news that's coming out this week, and we'll go from there. Thank you for taking your time to watch our videos. If you enjoyed this video, please make sure you like and subscribe to our channel. Until next week, happy trading.